Hey, everybody. Welcome back to another episode of Built to Grow. And as you can probably tell, my background looks a little bit different today. I'm not necessarily recording from my home studio, doing something a little bit different that for some of our audience members might know. But as I'm recording this could be different by the time I release this. But my wife is Chilean, and we love to come down here and visit my in-laws. I am blessed with a wonderful set of in-laws, and for our girls, we really want them, our daughters, we really want them to pick up their Spanish. They're all bilingual, but we just like them to improve it. And so we're spending some time down here in Chile, just enjoying time with family. The thing is as I'm recording this, it's in May, and down here in Chile, it's starting to get pretty cold. So you can see I'm a little bit more bundled up than most people in summertime in Texas are, where that's home now. And so yeah, I'm down here and in my father-in-law's office. Great thing that he actually has a photo over there of my bride and I. Spend some time down here. And today we're going to be doing something a little bit different that our marketing team and I, we decided, we love doing guest interviews because we love getting those deep insights from the guests that they could be particular experts in very specific areas. At the same time, even our team members on Brady CFO, including myself, we have particular perspective insight that we feel like would be very valuable for our audience members to understand about financial management best practices within the food and ag industry, and what we've seen and how we go about things and what we would recommend in order for ag operations to improve and just get better at their financial management and operations. And so today's episode, we are going to be talking about something I get asked about a lot, especially for up and coming ag enterprises. I wouldn't say very small mom and pop operations, but decent sized operations that are looking to grow and looking for the right accounting and finance resources. And the question is, so what's the big difference between a controller and a CFO? Because that's the thing. I think that there's a lot of thought out there that I just have to go get a fractional CFO. And even in the agricultural community, food and ag community, the concept of a fractional CFO is still pretty novel. It's still a pretty new thing. But there are many out there that I can see that it's just, oh, well, I have to go get a fractional CFO. And that may not be the case, that there's a series of things you may need dependent upon where your business is at, and even how many businesses you have. And so I think it probably serves well for me to explain what is the difference between a controller and CFO, and even within fractional, what are the right fits for where the problems exist inside an entity? Like, what is the right fit approach of whether you would get a fractional CFO or fractional controller? And there are two things that we sell in Brady CFO quite a bit. We have great controllership team members. We have great CFO team members. But they're the two things that we sell, and we get asked about it a lot. And some of our clients, that they have never heard of these concepts. They don't know what these roles are supposed to do. They don't know what the best practices are. Alternatively, some are more familiar, but still trying to distinguish what really is the definition between a controller and CFO. And so let's dive in. So I'm going to start with controller first. A really good controller is going to dominantly focus on a really excellent, efficient set of quality financial reporting, especially historical financial reporting. So think about it. They are going to execute a really strong month-end close of your books, get you an accurate representation of what happened in your business and why. And so that as you poke about at questions and you say, hey, in April, why did I lose money, or why did I make money? Most people ask the question, why did I lose money? They love it. They don't ask too many questions when they make money. They just go along with it. But, if they want the details as to what happened and why, a good controller is going to be able to provide the financial representation of what happened. And a really, really good controller is not going to focus on just recording the transactions, but actually being prepared to present and represent those financials to the owners and the leaders of the business. So they can already anticipate what questions are going to be asked, and they'll already have answers for it. That, hey, why do I have revenue variances that I wasn't expecting? why are my production counts down by comparison to what I was originally forecasting? They would already have taken a good solid controller is going to take a scrub and really evaluate your financials to have those answers ahead of time before you step into a call or a meeting with them. That is going to be the dominant focus of a good controller. And you could be asking yourself, so what's the difference between that and, say, my bookkeeper, or if I had an accounting manager? Why would I potentially need a controller? So I would say the difference between, your daily accountant, your bookkeeper, and accounting manager, which are all excellent and needed roles. Let me first describe the difference between an accounting manager and controller. A good accounting manager is still going to need a lot of oversight and direction from ownership and leadership in regards to how ownership and leadership wants the financials to be developed and what they want to see. If ownership says, this seems to be a reoccurring problem in our business and I need consistent details to understand what's going on here, that owner is probably going to have to work with that accounting manager, get in the weeds, and probably understand, how do I continue to report on this on a continuous basis going forward? We need to make this change. How can we make this happen? That accounting manager, given they're a manager, probably has a set of team members that they can work with what that owner is saying, develop a process with that owner, and then ultimately execute that consistently going forward with their team. That's what an accounting manager is going to do. Alternatively, a good controller is going to hear the feedback from the owner that the owner says, I really need this information more often. And a solid controller is going to have the ability to formulate the plan and how to get that into quality financial reporting going forward without the owner having to sit and hold their hand through it. A good controller is going to come up with the game plan for that. And they may have to go back and forth with the owner to make sure that, hey, I understand what you're looking for. Let's do some iterations of this, etc. But the idea is that they have the capability to ideate and then to go manage a process and maintain it going forward with their team. The difference between, say, a controller and a bookkeeper then is a bookkeeper probably isn't managing a team, and a controller has the capacity to manage team members and manage a whole system of processes and resources in order to accomplish the goal of closing the books on time, closing them in excellent fashion, and giving quality historical reporting to the owners and leaders that need it for them to be able to accomplish, and get the insight they need to be able to do their job well. So that's what a controller's dominant focus is. Now, there is a fact that many controllers can begin to take over CFO duties. So what does a CFO do? Let's dive in. So a CFO is going to focus primarily on taking that historical reporting and saying, what do we do with this information now? How do I play a fiduciary role in making sure that we get the best ROI out of all of the resources in this business, the people, the capital assets, the equipment, etc., the land, the buildings? How do I maximize the ROI out of these resources? That is what a chief financial officer is going to be looking to do. And they are going to be needing to look in the future a lot. That is going to be their focus, is taking what the controller produces to be able to look in the future and say, this is where we should go. This is how we should plan. And we're going to run out of money in investing in this plan. So let me get some external financing and get a loan, get some equity financing, and ultimately come up with a game plan to keep this going and continue to make that investment that will produce this large ROI in the future. That's what a CFO is focused on. So to get it more granular, budgeting, forecasting, and I'm not just talking about iterations of your budget, multiple iterations. I'm talking about 13-week cash flow forecasting, multi-month, cash flow forecasting, multi-year cash flow forecasting. They're going to be, working and managing relationships with banks and third parties. So they're going to be working with the banks and negotiating even new bankers, right? That maybe the current incumbent bank that you have isn't giving you the line of credit capacity that you need, given the seasonal nature of your business. Maybe you're not getting enough line capacity. The CFO is going to go find the bank that will actually give you what you need, and they're going to go negotiate what the terms are. The CFO is going to handle and manage the relationships with all the third parties and make sure that the third parties are delivering their services well. By third parties, I mean, again, bankers, but it could mean CPAs for your audits or for your CPA reviews, your third party assurance. It could be for your taxes, your insurance brokers, etc. The CFO is going to be the quarterback to pull all of those resources together and to actually manage the relationship. And what do I mean by manage the relationship? Well, I would say from experience, what a lot of controllers are going to have the capacity to do is to intermediate between themselves and the CPA or the bank. Like if the bank comes and asks and says, hey, I need this monthly financial reporting, the controller is going to be able to deliver to the bank what they need for that financial reporting. I would say the gap between that and managing the relationship is saying, is this bank actually giving us what we need? Is the bank analyzing our collateral and our liquidity appropriately and giving us really the total amount of loan funds we need to be successful? Or are they providing their services as they promised? And therefore, if they're not, maybe we need to go to a new lender, a new bank, right? So there's a difference there between kind of intermediating and making sure that those parties are getting what they need to be successful versus actually managing the relationship with the parties and making sure that cohesively everything is working towards timelines and getting done. That's where CFO comes in. So, especially for food and ag businesses, like what we've done in terms of our CFO duties is we've made sure that there was a good month-end close with the accounting team. And then we take that month-end close and we can forecast. So for some of our clients, we can sit there in August and say, okay, most of the crop cycle is done at this point. We can now forecast what the rest of the year is going to look like in terms of income. And then we're going to be able to anticipate, hey, do we need to potentially purchase our equipment this year versus next year so that we can take advantage of depreciation, lower our tax bill to this amount, and we can actually forecast a pretty good tax liability that would be owed. Forecast that tax liability, determine if, paying the equipment in cash or financing is the right path to maintain liquidity covenants with the bank. And we can determine, okay, what if we lower our tax liability by this amount, we pay in cash, what cash is left over to potentially go buy that new piece of property? And oh, by the way, we go and secure the financing for it, right? So it's a multitude of things that ultimately CFO is going to step in, but it's going to be managing that financial plan. It's going to be creating it and managing it from there. It's not going to be focused on just the historical reporting. It's going to be managing it. It's going to be interpreting the reports themselves to say, this is what's possible given the trend of what we can see and how things are occurring. This is what's possible over the next several weeks, months, and years, and given these varying assumptions. Right. So, a controller, I would say, is going to do many of them that are very senior are very capable of doing various CFO duties. They are going to be able to budget. They can do some forecasting. All of that is true. I would say the additional CFO thoughts and activities that exist that a controller may struggle with, at least they just don't have the experience in doing this well, is, okay, let's go buy another business. What price do we need to pay? How do we finance it? Hey, we need to go expand our facility. What does this look like in terms of cost? What do we need to do in terms of additional flow through or output of the facility to make sure that we cover and that we can actually service the new debt that we would take on to finance this project? That's where they're going to struggle is, doing some of the big level things and asking some of the really massive level tasks, not of just the accounting, but from an operations and strategy perspective. Can we get this done? Like, can we do it? And how do we finance it? And how do we make sure that we don't run out of cash doing it and that we grow our wealth and we grow our value as a business and our real estate collateral, et cetera? How do we grow? That's what a CFO is going to help ask. But controllers definitely can do budgeting, various forms of forecasting. I would just say a CFO is going to be more in depth and more capable with it. So we've gone through here, what's the difference between a controller and CFO? And hopefully that's been helpful, because I would say even more so, in our experience, a lot of food and ag businesses at roughly 20 million or below, oftentimes they may not need a CFO, that they may be perfectly fine with a full-time controller or even a fractional controller, fractional meaning part-time, especially if there's not a lot of entities, especially if there's not a lot of land holdings all over the place, et cetera, that there's not all these other assets outside of the single operation business. You can do really well with a fractional controller up to about 20 million in revenue. Once you get beyond that, I would say that you're going to start to demand or need a full-time controller. You're going to need somebody full-time in that seat. And I would say you're going to have to make a decision for yourself, because while I've defined what a controller can do, just like anything in any role, there's ranges of where people are at in their career progression, right? So you may get somebody who's more junior and may be very hungry, but they may not have all the budgeting and forecasting skill sets that you're looking for. They may be able to close the books. They may be able to work through some problems, but they just don't have the experience to work through some really big challenges that would make them more senior, that they can look at a very difficult problem or a very difficult task and know how to navigate it themselves and just come up with a game plan and get it done. And they can budget and forecast stronger and give you greater insights in regards to what's happening in your finances. So there's ranges of the controller. I would say, especially if you're seeking fractional resources, it's just a personal belief that you want everybody to be on that senior side. You're not paying for fractional. You're not paying for a third party to come in and to be able to support and help you, for you to groom and teach them along the way. Ultimately, we need to solve a problem. And I would say that for a fractional controller engagement, you're definitely going to want to look for somebody very senior in that controller role. They need to provide instances as to how quickly did they close the month-end financials. What are some challenges? What are some unique historical financial reporting things that they had to work through, and how did they work through them? Have they gone through any technology or system implementation upgrades? What did that look like in order to achieve the financial reporting that the business needed? Were they successful in that? Have them walk you through their forecasting capabilities, maybe even have them build something for you, right? Kind of test that, get a flavor of it. But that's, we have found that a lot of food and ag businesses can often operate up until 20 million, especially if it's a single entity, or maybe just even 1 to 2 entities with a fractional controller, a really strong, good senior fractional controller. Where I would say that deviates below 20 million is when you have a lot of different holding companies. And so if you had a lot of different land holdings and you have maybe one single operating business, but you have a lot of different land holdings, at that point, there's just a lot of complexity, right? You have a lot of things happen in different places, that those land holdings could have their own receipts coming in from the production and going to the packing, or, your settlement reports coming in, et cetera, et cetera. You're going to have to consolidate and roll all that up to be able to have an appropriate multi-year tax strategy, right? You're going to have to make sure, and one sec, y'all, that it's a little late here, and I'd love to get some more sunlight on my face. So you are going to need somebody to roll all that up, consolidate it so that you can actually forecast and plan with that, so that when you're sitting in August, you can determine, hey, this crop and this land holding did well. The crop cycle did well. This particular entity is also doing okay. All of these things are churning good quality income and cash. Well, maybe this is the year that I should go buy another property with producing trees that I can appreciate, because I actually have the liquidity to do it. And the only way you're going to know that is if you consolidate up all of the financials and be able to forecast forward on a consolidated basis. And that's where I would say that a CFO is really going to be needed. And so even if you're smaller than 20 million, I would say that the complexity of your operation determines whether you need a CFO. And I would say, especially if you're a multi-entity, that's where, and not just 1 or 2 entities. I'm talking when you're starting to range up to 3, 4, 5, 6, 7 plus at 20 million in revenue, this is where you ultimately are going to need some help. So again, a fractional CFO can work really well for organizations below 20 million, but it's highly dependent upon how complex those entities are, what's going on, how much tax strategy is needed, if those entities are making sufficient money that they need to consider cash reinvestment plans, and where does that cash go and what should happen, especially in more capital intensive operations that have to buy a lot of equipment or that have to consider, additional farmland purchases. So that's really where a good CFO can come in, even below 20 million. Alternatively, I would say that once you're starting to reach 20 million in revenue, I would really consider a good full-time controller. And then that's where we can complement with fractional CFO services. And so if you have a really good controller that can help with making sure that all of the entity financials are closed, that every bit of historical financial reporting is solid and set, and then we come in as CFOs to be able to take that information and be able to do some planning with, that is where there's a great fit here. So to everybody, that's where fractional controller and CFO services work really well for food and ag businesses. And we find even the CFO service can work all the way up to 100 million or more. I would say that we find a good fit below 100 million in revenue. And we just encourage, for our clients, don't overspend on overhead that you may not need. And so it's really important that you understand the difference between controller and CFO and what do you really need, and that you're properly getting the right resources. And so again, controller is going to focus a lot on historical reporting, could do some light CFO duties. Alternatively, a CFO is really going to be your financial strategist, considering tax strategies. How do we finance these operations? How do we get outside financing? How do we get the best deal, working with all the third parties, figuring out how we deploy excess cash? They're going to be coming up with a lot bigger plans than what I would say your controller is going to be focused on, but the controller is very focused on necessary work. And then the question becomes fractional versus not fractional. And I would say that you can definitely start with fractional in both controller and CFO services. It's just there's going to be a complex nature that at some point, roughly around, and our experience is roughly around that 20 million mark is when you need to start investing in a more full-time, corporate controller. And then you can carry on with fractional CFO services for quite some time beyond that, up to about 100 million in revenue. So hopefully that was helpful for our audience. That we've gotten that question many times before. What's the difference? What do I really need? We like to make sure that there's a good fit. We don't believe that a CFO is always needed. Truly, they are not always needed. And so we like to make sure that we actually get the right fit for the client, because it's so important that you're getting the best return from the resources that you could spend on, even in your accounting and finance resources. So hopefully this was helpful. Appreciate y'all. Until next time. Thanks, everybody.